Assalamu alaikum. Good morning, everyone. Today I'm going to represent about, first of all, my name is Shehzad Ahmed, and my co-author name is Al Hassan Darore. We are going to represent our research paper, which we actually wrote developing AI models for Islamic banks to manage the liquidity risk. Our how artificial intelligence can help Islamic banks and manage the liquidity more effectively while still fully comply with the Sharia principle. If we talk about background and motivations, liquidity is major concerns fall for all banks, but it's more complex in Islamic banks. This is because Islamic banks excessive uncertainty, speculation, this all thing. These ethical rules limit the number of liquidity tools available, especially during financial stress. Therefore, Islamic banks need effective and Sharia compliant solution, and AI offers a promising opportunity. As if we talk about our research problem, so Islamic banks rely on instruments such as Sukuk, Murabaha, and Wakala, which is like compliant. Management methods are more reactive and non-predictive. This creates gap between Islamic and conventional banking systems. Our main research is question is like, can AI liquidity risk management while affecting Sharia principles? So we will learn in the next. If we talk about the research objectives, our study has three main objectives. First, to compare the liquidity management between Islamic and conventional banks. Second, to evaluate how AI forecasting and early warning systems can improve decision making. Third, to propose ethical and Sharia compliant strategy for AI adoption in Islamic banking. Our literature review is actually enhancing the exist shows that Islamic banks often maintain higher liquidity ratio due to cautious strategies and this depositor loyalty. However, they are less flexible during financial shocks because the limited instruments and underdeveloped Islamic money markets. Recent studies also shows that how AI significantly enhancing the risk forecasting, and when properly supervised, it can be compatible with the Sharia principles. If we talk about our methodology, our research uses the qualitative and analytical approach. We relied on secondary data, including academic papers, regulatory reports, and banking statistics. We we then applied comparative and thematic analysis to understand the liquidity practices and assess how AI can fit with the Sharia compliant framework. If we talk about the risk, liquidity risk in Islamic and conventional banks, so the conventional bank have access to a wide variety of the liquidity instruments such as like treasury bills and interbank loans, which allows quick adjustment. Islamic banks must use Sharia compliance tools like Sukuk and Murabha, which are used ethical but often slower and limited. This struggle difference increase the liquidity risk exposure and the highlights the need of the innovative technical solutions. If we talk about the empirical observation, evidence from the countries like Malaysia, Indonesia, and the UK shows that Islamic banks generally maintain strong liquidity ratio. However, during financial crisis, they face the greater difficulty adjusting liquidity positions due to limited market access and instruments. This reveals structural weaknesses in the current system, of course. We talk about the role of AI in liquidity risk management. Artificial intelligence can greatly enhance the liquidity management by providing the predictive analysis, real-time monitoring, and early warning signals. It also allows the bank to move from the reactive to proactive decision making, reducing the reliance on rigid short-term tools while staying within the Sharia boundaries. If we talk about like AI and Sharia compliance, so AI can also support Sharia compliance from the, for example, if we talk about natural language processing and analysis, contracts and detect the eliminates related to riba, qarar, or mesiar. This helps Sharia supervisory boards to ensure that banking operations remain ethical and aligned with the maqasid al-Sharia, the higher objective of the Islamic law. If we talk about like the challenges, what kind of challenges, like despite its potential, AI faces several challenges, including high implementation costs, lack of technical expertise, limited Sharia compliant data, regulatory uncertainty. There are also concerned about the algorithm basis and transparency, which requires continuous human and Sharia oversight, of course. If we talk about the recommendations to successful adopt of AI, Islamic banks should encourage collaboration between AI specialists, Sharia scholars, and regulators, and staff training, clear regulatory guidance, and continuous monitoring by Sharia boards are essential to build the trust, transparency, and sustainability. So, in the end, conclusion, AI offers Islamic banks valuable opportunity to improve the liquidity forecasting and strengthening compliance and enhancing the financial reliance. With proper governance and ethical supervision, AI can support with the both financial stability and Islamic values. Thank you so much for bearing me for this time, and I would be happy if you have any questions or comments. So please.